hoping they can get him on. We're on. Good afternoon, everyone, and we're sorry for the slight delay there with our logins, as usual with Google Hangouts. It's always an excitement to be part of an experimental initiative like this. So I'd like to welcome you to the AccountingWEB Budget 2015 Technical Panel, and I'll introduce our guests. This event is being run in association with our budget sponsors, TaxCalc, and we're very pleased to welcome, just to my left in the images on the bottom left, I'm the one talking, the next gentleman along over there, sorry, is Steve Checkley, and he's a director at TaxCalc. As many of you watching will know, this is a fairly profoundly important budget for the tax software industry, so we're going to get Steve's insights on what the plans for the tax return are likely to mean for both practitioners and their software suppliers. Another person just to Steve's left, who you may recognize, is Rebecca Bennyworth, a longtime editor at AccountingWEB, currently the chair of the ICAW tax faculty, and we suspect Rebecca too will have much to say and help us with on not just on the tax return issue, but on some of the other areas, for example, the corporation tax tweaks, and various other things. Just joining us, the shadow beyond that, is Philip Fisher, who's the Employment and Remunerations Partner at BDO. Philip's another long-time AccountingWEB contributor, and he'll be, again, offering some expert insights on the kind of the directorship issues and the issues around entrepreneurs relief, there's just been a lot of recent complications around that. Finally, going on to the far left is John Hood, who's a partner with Gabel Tax, and John's area of special interest is anti-avoidance, and investigations. That always seems to crop up at budget time of year, and I think, John, you may have one of the sort of stronger hands to play in this event. The practitioners among the audience will be concerned to hear more about the impending criminal offence, but we think you'll have a few more topics to tell us about, I'm sure. So let's carry on. So my perspective as a journalist covering this year's budget was that it was fairly thin pickings on the small business front. There were some grandstand issues for personal taxpayers. Maybe Rebecca you can touch on later. But the thing that's really got all the AccountingWEB members most excited is this almost an aside from the Chancellor, and it was backed up by a fairly detail-free policy document, was the plan to bring in a personal tax account by 2020. So, Steve, this is meat and drink to you. But what can you tell us? What have you found out since the paper was released about the shape this initiative's likely to take?
Well, it's difficult to say, because the actual document that was being put out by Her Majesty's Government has been quite slim on detail. It's one of those things where we have, with TaxCalc through BASDA, that we're part of an organisation of software companies, we need to work with HMRC and find out what the detail is actually going to be and how this policy will manifest itself. Other than what has been put out and by the Treasury, and that we've commented on and put a statement up on our website, there's not an awful lot more that we can say about it, really.
Yeah. From previous developments that you've done with HMRC, do you think the foundations are there that you can identify the components that may then feed into the personal tax account?
Well, I think HMRC have taken a number of steps over the last couple of years. In the introduction of RTI, for example, puts a lot more information in their hands. It would make sense if they're able to start stitching together the government systems and put them, so the taxpayer can have an online account and see what information HMRC already know about them. But it's oh, sorry, my mind's gone slightly blank there.
Okay, yeah.
I was going to say, actually, that there have been a couple of in some documents that have been put out, some explorative documents that the government put out from time to time. Such ideas have been mooted, and now the government seems that they actually do want to go ahead and put this into action.
Rebecca, can you perhaps give us, have you had any tip-offs from your contacts at HMRC, or can would you be willing to speculate the shape that the tax account may take?
Well, John, yes, thanks for asking. There are a few bits of information that are out in the public domain at the moment on this. We do have the digital exemplar, which is HMRC speak for one of their first digital services, and the one I'm thinking of is called Your Tax Account, or YTA, because you have to have a three-letter acronym. Now, YTA has been around now for, I guess, about 4 months, and last time I heard figures, there are about 2.5 million users. During March and April, all businesses using the business tax dashboard will be migrated over to YTA, and what's on your tax account is all of the taxes as a business that you deal with. So if you're VAT registered, you'll find, and let's say a limited company, your corporation tax, your VAT and your PAYE will all be together on one account. Now, I know HMRC have been looking at what else they can do with this YTA. It seems logical to me that one of the component tools, if you like, is going to be the ability to enter figures directly in. And for me, this sounds a bit like most agents are going to be doing what they've been doing all along, except they'll be missing out the middle step of actually filling in a tax return, and they'll actually be getting the data straight onto HMRC's back end. So it will sort of skip the government gateway type arrangements. You'll just log in and put it in. Of course, one of the key things for agents is then going to be how they obtain and demonstrate client approval. And actually, the easiest way to do that might be to print something out that we call a tax return, get your client's approval on it, and then allow the figures to go up to HMRC. But I think we're going to have a big conduct in the summer, and I think we'll then see a bit more about how it's going to go. But, you know, I don't think it's the end of the world, but we just need to watch it very carefully, see what's happening.
Okay, I mean, we've Rachel Power and Francois Badenhorst, our community team, have already compiled a couple of articles on this topic, and the AccountingWEB membership is probably a little bit spooked by the idea, and some of them are downright hostile, or the hostility is also comes in the shape of skeptics who look at the state of the RTI data that they're viewing on their own dashboards as is, and not really expressing a lot of faith in whether this will migrate effectively to the personal tax sphere. If we turn to you, Philip, you know, are you you one of the practitioners who might be welcoming this idea, or are you on the skeptical side of the fence?
I think I'm always skeptical, I'm afraid, John. I think my initial reaction is that if we hadn't had a general election coming up in a few weeks' time, this announcement would probably have been delayed a year or two. And it just feels like another George Osborne knee-jerk where he's looking for publicity, he's got the publicity, but I just fear that what he's trying to introduce is nowhere near ready yet. And they've got a target date of 2020 for getting most people across fully, I think. And that might be optimistic. And 2020, I think, is probably the date of the next general election.
Philip, you're outdoing me in cynicism there. I'm impressed.
I'll take that as a compliment, shall I?
Yeah. I guess, Steve, if we could come back down, John, do you have any views on the personal tax return, or is this one you're happily willing to? You don't see any pros or cons from the anti-avoidance point or investigations point of view?
My only comment would be, are they going to bring in effectively a live system, which means you have to pay your tax earlier, and they could move the payment dates forward so that they can get the money into the coffers earlier. But I don't know. Maybe I'm even more cynical than you, John.
Try not to outdo each other here on cynicism. This is supposed to be a productive and helpful session. To get onto that point, perhaps, Steve, all of you, it would be the kind of practice changes and preparation practitioners might need to do. I mean, initially, as I say, everyone is really uncertain. You know, it's created fear, uncertainty, and doubt, like many technology announcements. So Steve, you know, how you're finding out your facts so you can start designing the software. But you know, how are you managing your own customers in this situation?
I mean, we like to think we do quite a lot of customer education in what's going on in the tax world. There was a lot that I did, for example, with identity assurance. Wrote articles, put information out into the public domain about this. As information comes to hand, like I say, we've already put a release out to say it's going to be okay. So HMRC are always going to need software companies to assist with the submission of tax information. We don't see this as being any different. With practitioners, if you were to think of your clients, why do your clients come to see you at this point in time? They have a trade, they have various affairs. They want an accountant to manage those affairs and deal with their tax. And if, as I understand some of the documents that I've seen so far, if HMRC are going to be doing a calculation on behalf of that taxpayer, I'm pretty certain that clients are still going to want accountants to make sure that that tax calculation is indeed correct.
Okay, and Rebecca, you're a practitioner yourself, as well as representing many more on the faculty. But while we try and find out what shape this will take, do you have any practical advice to our members and to small businesses about the kinds of way they should approach the whole personal tax account project?
I think my advice would be to keep an open mind. I think for practitioners, it probably actually isn't going to change what you do very much, provided you are filing electronically using tax software. I do think that if you still file on paper by the paper deadline and don't use HMRC's online systems at all, I think you're going to have to get your head around the fact that you are going to have to get onto a computer and get on the scary internet. That, I think, is the main transition. Those who are stuck on paper, I think, really need to think about the future.
Mm-hmm. Just again, the cynicism is rearing up on me. Am I correct that MPs are still have to file on paper returns, or have they been brought into the electronic now?
Yeah, very good question, John. I mean, with MPs, it's not just MPs. It is also senior police officers, judges, members of the security services, and that is a completely separate issue because it's all about how their files are dealt with at HMRC and who's got access to that data. So yeah, I've already had a question about that, and I'm not sure. I'm not sure which way they'll go.
I mean, there were also the religious groups. I think the Plymouth Brethren and a few others who still, I think, retain the right to not to have to use electronic means.
Yes, you're right. Yeah, you're right, John. And actually, the publication that HMRC put out on Budget Day did say that there will be a paper return for those who wish to use them. And HMRC's got, alongside these digital leaps and bounds they're doing, they've got a sort of side aisle running alongside called Assisted Digital, which really means allocating people to help those who aren't able to access digital for whatever reason. And let's be truthful, for a lot it's of individual taxpayers. It's either elderly taxpayers or it's people on low incomes who haven't got a computer and that sort of thing. But I think they'll be catered for. It's more the agents. I think if as an agent you haven't yet made the move to go onto computer to do things, then I think maybe you might decide that it's time to hang up your pen, as it were.
Mm-hmm. Okay, and anything to add, Philip? I mean, I'm sure BDO is well equipped with electronic personal tax systems now, but have you heard any word internally there? What approach
I've heard nothing internally, but I suspect that many of the people who are filing on paper at the moment will not need to file returns by the time this system comes in. A combination of getting taxed through PAYE, the new exemption on investment income up to £1,000 or £500 for higher rate taxpayers should mean that a large number of people who previously had to fill in tax returns to no benefit for anyone really will suddenly find themselves exempt. And any practitioners who are still filing on paper are probably well advised not only to hang up their pens, but perhaps to try a different profession.
Okay, well, let's stick with you, Philip, and actually get on to some of the more technical points. And as I say, it's impossible to ignore the significance of that announcement. It really has just taken over AccountingWEB for the past few days. But among the tweaks and policy things we found were a couple of sort of looked like loopholes being closed on capital gains, and particularly around entrepreneurs' relief. And as I say, if I remember rightly, this was also the restriction on goodwill is actually in the finance bill that we're going to see on Wednesday. Is this because is entrepreneurs' relief becoming too successful for its own good, and HMRC is wanting to restrict the tape out? What's your analysis, the overview of why these specific measures are coming out every budget?
I think it's the last one, that they draft legislation too quickly and they don't achieve what they're trying to. And therefore, there are lots and lots of loopholes, as you described them. It's probably a good description in the legislation. And the goodwill one was a loophole that people were using. They've now attacked 2 more situations. I wouldn't necessarily describe, my colleagues, to be more exact, who are really expert in the field, wouldn't necessarily describe the one attacking PE houses and their investees as a loophole. And we're having a conversation earlier today with my colleague Chris Chappell, and he is fairly, I wouldn't say very firmly, but fairly firmly of the view that if this was a loophole, it would mean that people would stop doing it. And the main motivation quite often behind structuring of PE investments into where all the managers are asked to invest through a company is entirely at the behest of the PE house, who wants cleanliness and clarity. And therefore, maybe this will attack some people who possibly are getting an advantage where they shouldn't have, but it's entirely a commercial arrangement that is likely to continue. What it's actually going to do is it will mean that some people who currently qualify for entrepreneurs' relief won't, and that could include people who do have a 5% economic interest in a company, but just through an indirect measure. And that does seem wrong, even if the underlying spirit couldn't be attacked by many people. So that's one of the 2 measures, the one around equity houses investing in companies, and possibly it could be an overseas company where they want a UK intermediate company for the managers as well. So that's possibly harsh in some cases, but it's a fact of life, and those involved in these arrangements are going to have to accept that. The other change is the one where, so I'm just looking at this and trying to get my head around it, where there's an investment indirectly again, and it could be a situation where, again, someone has a 95% investment in something and fails to, through perfect commercial reasons, and fails to get the entrepreneur relief. And we're arguably going to get even more anomalies as a result of these changes than we've had before. So what's the future? Entrepreneurs' relief is one of a long cycle of different equivalents that have given lower capital gains tax rates. And is it maybe time just to go back to a simple long-term investment holding arrangement? That's something the next government might consider. Will entrepreneurs' relief get scrapped? Will it get simplified? I really don't know.
I mean, Rebecca, turning to you, do you think that these constant, the sequence of anti-avoidance tweaks to the entrepreneurs' relief rules, is this, as Philip was beginning to suggest, is this putting the relief at risk, or is there a danger that by hedging around it and tweaking it, adding to the complexity so much, the government will undermine its effectiveness?
I think it's still a very important relief, John, and I think many of the AccountingWEB community will still be accessing entrepreneurs' relief with their clients on major business disposals. I think for me that the 2 big ones was one that we had at Autumn Statement, which is actually now came in on the 3rd of December. And to be frank, the clampdown in regards to goodwill was not a surprise. It was only surprising to me that it took the government that long to get around to shutting down what was effectively a double loophole with not only the entrepreneurs' relief but also the tax write-down in the company. And those 2 together produced a negative tax charge on incorporation for many businesses. Now, anything that has a tax charge that's negative has got to be, you would think, quite short-lived, but actually that scenario with both taper and entrepreneurs has been around for in excess of 10 years. So I'm surprised really it took the government that long to get around to sorting it out. But However, I think, as Philip said, it is what it is. Those who hadn't made the relevant disposals by the 3rd of December, when those rules changed, they're too late, and that's that. For me, the other interesting one, and I think it was a bit of a dodge, is the associated disposals, where somebody could, let's say they had a property owned outside a company, they were going to have that redeveloped, they could sell just 1 or 2 shares in their personal company and then benefit from associated disposal relief on the property, and that one's been slammed firmly shut. But I don't see it as undermining the relief. I think probably Philip's point is a good one, is that the fashions come and go with these reliefs, and when a Chancellor hasn't really got a lot to say, he might decide to reinvent entrepreneurs relief and call it, oh, I don't know, how about retirement relief? We haven't had that for a few years. So I think it is a function of needing to do something, because they can't do nothing, rather than this specific relief being fatally undermined.
Okay, thank you. And again, I can see why incorporating your sole trader clients has been so popular over the years, which did perplex government and the tax authorities a while ago. Do you have any sort of practical advice for those? I mean, will the taking away of the combined entrepreneurs release and the tax write-down, do you think that will stem the profession's enthusiasm for incorporation, or will that continue?
I'll pick that one up. Philip might have a view on it as well. I mean, my view is if you want to incorporate for genuine reasons, you want, as a part of your business growth, to become a limited company, to provide for succession and so on, then you will still incorporate. You've got 2 types of relief you can use to do that, so you won't end up with an unwanted capital gains tax bill. And it's really just going back to the situation before we had entrepreneurs relief and people sought to exploit it. So you can shelter your gains using some of the old-fashioned reliefs, holdover or incorporation. But what I think it will do is there has been a bit of a rash of, if I can call it, overexcitement in incorporating businesses with quite extraordinary values for goodwill, particularly in relation to things like medical practices, which HMRC are known to be deeply unhappy about. And I think some of those were really driven by the goodwill on offer and not really by anything else in particular. It was the dash for a minus tax burden on £500,000 means that the HMRC give you 50 grand. Well, people aren't going to say no to that, are they? So I don't think it will stop incorporation, and I think genuine desire for old-fashioned reasons, the reliefs are there. What it's going to stop is some of the sort of getting overexcited stuff.
Great, thanks. Okay, John, you've been very patient down the end of our line there. Thanks for listening to this stuff. Do I assume, I mean, did those capital gains tweaks, is that something that crossed your radar on budget day, or?
Well, I've certainly experienced quite a lot of inquiries from professionals on the goodwill point. It's certainly been a common theme over the last six to 9 months, where people have phoned me up saying they had an inquiry and it was specifically targeting the goodwill point. So yeah, that's very prevalent. Yeah.
So on last Wednesday, from the sort of HMRC powers and investigations point of view, what were the things that caught your eye most?
Well, obviously the reference to the introduction to the new strict liability criminal offence for overseas assets. Obviously the government were talking about the common reporting standard being brought in by the OECD, and how that means we're going to have last chance saloon disclosure opportunity starting in January 2016 until sometime mid-2017, until the information is exchanged. That was very important. Also, the new reference to, dare I say it, all the problems recently announced on HSBC, and that they will be targeting people who assist in tax evasion, and also the corporate offence, corporation offence. So I think there's quite a lot going on in the compliance field in terms of changes that are going to come in over the next 12 months, whereby the old disclosure facility, the LDF, which was mentioned in the Public Accounts Committee discussions with HMRC, that will be closed down at the end of this year, and HMRC are going to take a lot tougher line on people who are caught involved in.
Okay, well, you've frozen there slightly. I'll see if I can if the buffers will stop messing around when you come back. Some of those sound like they're possibly of more jeopardy to individual taxpayers and dare I say it, tax agents as well, with the advice, the crime for assisting
Yeah,
leaders.
Sure.
After you.
Well, I think if you're caught for or HMRC believe that you've been involved in assisting someone to evade tax in some way, they will be certainly looking for examples, and ultimately this could end up in fine, which is equivalent to the client, the taxpayer. Now, obviously, if you're a small practitioner, but you have one big client and who has a very large tax liability, this could have real impacts for you. So I'm going to be very interested in seeing what the new legislation and conduct say on this particular point, because it's very controversial, but also it has a real impact on all professionals.
Mm-hmm. Rebecca, if we can turn to you. I mean, this has already been through the consultation mill a bit, has it not? The assisting an event. I mean, what stance have the tax faculty taken?
Well, if I can back up, so one component that that has been mentioned is the strict liability. Now, I must say that the tax faculty's response on the strict liability consultation document, which went in about November time, was pretty anti this strict liability. We feel that it's a step too far, and that HMRC is really, we had a feeling on a bit of a power grab. I understand that there is a need to really shut down evasion, which is a criminal offence, and to bear down hard on avoidance, which is not. And I will say that in the Chancellor's speech and in some of the things Danny Alexander said, it was a bit difficult to discern whether ministers can actually tell the difference between them. But the strict liability, one of the things that surprised me is that I thought that whole issue had gone away. It wasn't mentioned in the autumn statement, and no mention was made of it. So I think quite a lot of commentators assumed that it had been sort of quietly removed from the menu, and more fool us, because here it is back and ready to go. So it is. I do question it. You know, the concept that somebody has not disclosed an asset, that is a criminal offence, without having to show any intention to defraud or anything like that, I do find quite challenging. But we gave HMRC a really rough ride, and by we I mean the entire profession, over the direct recovery of debts issue, and it may be that we've got to sort of accept one in exchange for the other.
Mm-hmm. Okay, but you I would assume the faculty's point of view, you don't necessarily see large numbers of members becoming the examples that John referred to. I mean, this will be
absolutely not. No, any member of the ICAEW and most of the other professional bodies, if not all, if they went anywhere near any of this stuff, would be out on their ear before their feet touch the ground. So, so yes, it's not something we anticipate having to advise members about. That you know, we're talking about something that is a criminal offence, and it is absolutely no doubt that encouraging your clients to evade tax is against the law. So I don't have much sympathy with anyone who thinks they're going to get into trouble with that. I just hope they leave the profession as soon as possible.
Philip, and I have to be careful how I phrase this, but of any of the anti-avoidance topics that John has mentioned, have they caused any concerns or reactions amongst you and your colleagues? Did anything stand out that you're as concerned about as John and Rebecca?
I think one has to be concerned about the fact that there's still a vast amount of evasion going on, and the distinction between avoidance and evasion, with the ground in between of abusive avoidance, is going to cause a lot of concern and confusion for everybody in the profession and beyond. The fact that the revenue very rarely prosecutes suggests that even if people are involved in slightly dodgy circumstances, they may not find themselves subject to prosecution. But as Rebecca says, they ought to be kicked out of their professional organisations if they belong to them. And as a general principle, one would hope that reliable and responsible professionals would just not be involved in anything of this type. The grey areas of the law, as I say, are really where I think one can get concerned, because
Okay, I don't know if have the others. Is Philip still talking for the rest of you?
No, he's
No.
frozen for me.
No.
Okay, I'm saying. Well, I hope he wasn't saying anything too anti-HMRC at that point. I guess we're getting to, even with our delayed start, getting towards the end. John, would there be any other pointers you'd want to leave the participants with? Any things to watch in the next budget, which we never know? You know, this did feel like a bit of a afterthought over the past week. You know, the real excitements might come in May or June. Have you got any things you're watching particularly on your cards? I mean, I guess Rebecca mentioned direct debt recovery. That one could come back to haunt us before too long, depending on the complexion of the government. But what's on your sort of watch list as we go into the election?
Well, I mean, I touched on the point about the common reporting standard and how the participating countries, and I think there's roughly 55 countries signed up to exchange information every year now on individuals that are resident outside the jurisdiction in which an asset is held, a bank account is held. And I think that's going to be a big thing going forward, that HMRC will receive information automatically from around the world on UK tax residents. So I think we are in, the phrase "no hiding place" is going to be a big thing. And I think we really are going to see a change in how people can structure their affairs.
Okay, thank you very much, John. I think I'm beginning to feel like this is an episode of Agatha Christie or something, where slowly the gremlins are creeping up and running off with one of us one by one. So, Rebecca, I'll turn to you next, just before they get to you. You are preparing on TaxCalc's behalf our sort of Finance Act and Budget 2015 roundup report for small businesses. Are there particular portions of that are causing you the most effort over the past few days, and things? Would you commend our?
Yeah, I think, John, not so much in the effort front, but I think my key points that I'd pull out of that document. I think on direct recovery of debts, we certainly will get the power in one of the Finance Acts this summer. I would be quite surprised to see the power in the Finance Act we'll see this week. I think there's a little way still to go on the consultation draft, but it will certainly be here. The power will be here, and it will be in use in just over a year from now. The second thing, of course, not much publicity given to it, but the government gave us a sort of taster that the £500,000 AIA will not go down to 25,000, but they haven't told us what it will go down to. And quite a number of businesses are saying, look, if we need to plan expenditure, then we really need to know what it's going to go down to. I think the answer to that for advisors and small businesses is to say, well, get your expenditure in before the 31st December 15, and then actually you do know what the allowances are going to be. So if you work on what you know, a bit later we'll find out whether you can spend any more money later. But I think those are the two key standout points for me at the moment.
Great, thank you very much, Rebecca. Steve, I guess we'll wind up with you. I did think of TaxCalc briefly when John was talking about the HMRC's real-time access to data on individuals' offshore tax affairs. So at the kind of the investigative end of things, they're beginning to look at a constant flow of data and possibly plugging that through to the personal tax account. We seem to create this this virtual tax system before. So again, returning to where we started with, I'm sure TaxCalc won't need to be involved with the data exchange operations, but can you just paint a picture for the practitioners before we go of what life in the will life be radically different, do you think, in the new all online tax world?
I think it's been said. It's going to be, for me, my view, it's going to be as it is at the moment, but the submission won't be with a facsimile form. It'll be gathering the types of incomes and submitting it. It'll be on the. Oops, sorry, someone from AccountingWEB just appeared. Just disappeared.
That's our producer in the background.
Right. Yeah, I mean, when you think about this industry, we've seen the introduction of self-assessment. I was not long into practice when self-assessment came along, and the industry has carried on. The online filing mechanisms, the government's website, so people can file their own tax returns. I think this industry keeps changing, and this is another change, and practitioners will change with it. And software companies like us, we want to get the best solution for everybody. We have we have meetings and contacts at HMRC. We discuss these things, and at the end of the day, it's policy. Everyone has to work together to see how it's going to manifest itself. But I can say that we're going to be looking for the best case for everyone concerned.
Okay, well, thanks for that, Steve. And again, thank you with all your budget sponsorship that makes these, both Rebecca's report and the events like this. Thanks to all the people who've come to listen in during the live event and who watch it afterwards. I think I will have to confess we probably spent a lot of time speculating about the impact on the profession of several measures that have yet to take shape. I'm pretty certain the next time we convene something like this, the conversation will be much the other way around. We'll be looking at the much more detail at the things that really will be inflicted on us in the next Finance Act. So I hope that some of you can join us again for that, and thank you all for your patience earlier on. It was a useful session, and on behalf of all the AccountingWEB members, we really appreciate it.
Thank you very much.
Thanks, John.
Thanks.
You.